Hello, everyone. How's everyone doing today? Sinatra, Simon, doing okay?
Good early morning, Dale.
So there's some issues with Zoom, I believe, guys. I'm not getting the invites either. So, save one, everybody. Save your, at least one, and it'll work for you. So, good afternoon, Kay. How are you, buddy?
Yeah, good. Yourself?
Oh, okay. So, had this big break in yen yesterday, fought its way back. I guess this was previous highs. That's why I have the fibs, previous lows of the first break.
Yeah.
So, just wondering, and then up here was 61.8, held it pretty good. I'm not sure it's going to have another high in it, even if he's a hawk on Friday.
Yeah.
Looking, what are you thinking? Because
Well,
10 year looks like it wants to roll.
Yeah, those US 10s are driving the whole thing, and we've got something to look out for because it's confirmed that Kuroda will go to Jackson Hole as well, and he hasn't said anything about the Japanese CPI data so far. So we were a bit telling our friends and listeners to be a bit careful over the weekend because the yen may move if he decides to comment on what's happening in their inflation sphere. So I think in the meantime we should be rangy somewhere, between 136 and that 137.5 probably.
Okay, I hear there is some fear in the market of potential intervention. Are you hearing something like that too?
No, I think it's just it's
That's
rumors right
hope.
now because they will likely, well, that's how it was traditionally. They will confirm it after the fact. I haven't seen anything that from official side that would hint that they had intervened
Okay,
or checking rates also.
Okay, Euro, same story, right?
Yeah.
We haven't made a new low yet. It's starting to build. One thing I did say, and I do think, I've seen targets like at 97.5 or so now, but look at where this candle tagged yesterday. It's kind of a wedge line, a throw over, and really responded to it. I would say that, closing back inside of here would change the picture, but, until then, like I was saying,
don't tell me, Dale. Don't tell me.
I think, and I was saying on the flow show as well that as soon as the dollar move was done after the numbers yesterday, the rest, the euro started to weaken again, and we are. But it's not well. Okay, the rest of the dollars are also on a comeback trail. But if you look at it, the rest of the dollar pairs have not corrected as much. So I think it's more a case of euro weakness than pure dollar strength, or a combination of euro weakness and dollar strength after those data, because most of the euro crosses are lower this morning.
Yeah, even the pound has a little better look to it than the euro. Don't you think? I mean, this is deeper on the pullback than cable. But, I think there's still a chance that the yen has put in a high and that we put in a failing rally here into Powell. Canada bouncing pretty good today, but I think this was pretty decisive, what we had here. And I'd be selling rallies in Canada. Actually, got short up here yesterday night, and I would love the dollar to keep running because I would love to buy the Aussie on maybe a stop hunt under 68.50.
Yeah.
And I don't know why the dollar now, wouldn't make a new high. If euro's going to 97.5, there's another 200 handles in it. So That's what I see. You know, gold's holding up pretty good with a strong dollar. And
Yeah,
I
the
think a
metals
lot
are
of it,
doing the metals are doing better. Silver
Yeah.
as well is holding the $19 line.
yeah,
Gold has a bit of a resistance around those 1760 zones, so I would rather call it a range right now. But we might
Yeah.
have seen the major bottom the other day. So
yeah, I'm calling it exactly that. And you know, even when you make a call like that, you still have to know where you're wrong. So I'm long both with stops under the low. I like the retest we had here in gold yesterday, and the gold silver ratio is not really, you know, telling me much here unless we're topping up here at 92. If we roll over, that would be positive for the whole complex. So I like them. It's just whether or not they could survive, say, $110, $111. We'll see. I think it's more important not what the dollar does, but what the yen does when it comes to the precious metals.
yeah, absolutely.
And I think yields could be peaking up here.
There's a bit of resistance just around here, 306, 307. I've seen also on the pictures I was looking at this morning. There's a little bit of resistance. So, but again, I think the market is now firmly focusing on what's going to be said or not said in the whole, right? But and I agree on the Aussie, by the way. I've traded twice of this mid 68 level. There's a bit of a level there around the 68.55, and it's a decent one to trade off right now. So that's not too bad. I took it off yesterday on the rally, luckily, but I flipped back into Euro Aussie short. I'm still short a few Euro crosses, Euro Aussie, Euro Canada, Euro Mex.
Yeah, you see, if we flush here in Aussie one more time and clean out these lows under 60, I think we'll be way above 30 on that. And you know, now I'm looking at it as if the dollar's strong and it takes Canada up and Aussie down, it's a gift. So trade selection, right? So we've been talking about the commodity currencies. If you want to fade the dollar, that still seems to be the case, and maybe the yen is about to join that trade. So we'll see. I think under yesterday's low, the yen's going to have some trouble. But you know, I'm going to be Stelios now and wait for Jackson Hole to put anything new on, and you know, I'll let everyone else scalp their brains out until then. If you have any questions for Pedro to ask, he's going to Jackson Hole. He sent me a DM on Twitter. You know, I don't know good Fed questions to ask, but if you guys have any, I'll forward them to him and maybe he'll ask them and you could hear your question during the.
Well, Dale, if you can ask him if the press are doing their normal booth setting up around the grounds, that's where we can get most of the comments from.
The booth?
Well, you know, like Bloomberg and whatever, they set their press stalls out around.
Yeah.
And that's where they all interview the central bankers. That's where we can get most of the comments from, rather than the bits and pieces.
Okay. Well, if you have if you have a question you want me to have him ask, Paul?
Yeah. Why did they screw up last year?
Blake, you want to ask Paul anything?
How he takes his coffee.
Stel, are you here?
No, I missed the comments on why you were asking that. I'm sorry. I was actually getting my own coffee.
Okay, Pedro's going to Jackson Hole and he asked if we had any questions.
Pedro da Costa?
Yeah.
Oh man. Holy cow. Let me think about that for a second. Ryan's asking the easy one. I heard that, Ryan. Like what's he gonna answer?
I bet our community does.
No, well, ask him where the terminal rate is. Say just tell us where the terminal rate is. The market wants to know.
Okay. I would ask what kind of data or proof do you need to see for you to start thinking that inflation has peaked?
That's a
Of course,
good
he's
one.
not gonna actually answer, oh, we need to see 3 prints of declining PC or whatever, but you know, any kind of indication, because really that's what the market wants to know.
Okay.
I'd ask him what next month's NFP is going to be.
No.
Okay, Kman, what would you ask the Fed chair?
I would ask him if, in line with Draghi in former years, does the color of your tie have any importance for the directions?
Are you going to attack him with a bowl of popcorn like
Or-
Draghi? You know, that's what I would ask. I go, Chair Powell, would you duck if someone threw a bowl of popcorn
For a shoe.
at you? A shoe.
But a serious question. I'd ask him how high are they prepared to take rates to fight inflation?
Yeah, where's the terminal rate?
Yeah, that's
Not so much terminal, but how high? You know, can they go 6, 7, 8? Keep going, 10%? You know, how?
Yeah.
Isn't
Where
that
they
the
stop,
terminal?
how
Isn't
they-
that
how
the
they-
terminal rate?
Sort of, but you know, you can keep going.
Yeah, a
That's
bit like
a
the
terminal.
bit like
Like I
the
say-
debt ceiling, which is not the ceiling.
Right. I mean, if
Right.
you ask him like where the terminal rate would be or how high rates could go, I mean, that's a moving target, but just getting an answer from him would be, you know,
Yeah, victory.
Yeah.
Yeah. All right, I'll send Pedro a DM on that.
there you
All
go.
right, so
look
we'll
at
go
Dale
with-
slipping into people's DMs. That's great.
Yeah. So anyway, you know, I'm a Forex guest hunter. So
We should be sending you to Jackson Hole next year.
yeah, be nice to be out of the desert and be there. I've seen shots up there. It's beautiful right now.
Yeah.
Anything market wise you guys want to talk about? Blake pointed out the support that we had in S&Ps yesterday around this level. Looks like it's trying to hold it here, Blake.
Yeah, it was really important support. I can take over the screen here
Oh, sure.
and I'll
Like
show
the
you where
outer
the
limits, man.
what's that?
Just like the outer limits. I'd go,
Just
Mom,
like
they're
the-
taking over the TV screen.
No, this
What can
is
we do?
really key support. If you go all the way back to February, this 4100 level's big. It's a 38% retracement,
Yeah.
just comes in just slightly below that. This is the whole wedge move higher, and you can see very critical support here. So
Yeah.
while we're above 4100, you got to be a little nervous. I was just I actually saw a headline from Dave Keller, or Dave.
Yeah. Dave's
Super
going to
guy.
be here Friday.
He's looking for 4,700 in the S&P from here. And he's coming here on Friday.
Yeah.
Oh, well, then there you go. You can ask him what he meant by that. By
Yeah,
his
what
earlier
the
target.
hell are you talking about?
I know,
Dave?
especially when the S&P is trading at 3,800. You got to ask him why. I'm just
He
kidding.
Flipped, huh? Yeah.
But yeah, I hadn't watched or read what he was saying. I just saw it go by. Well, I didn't get a chance to because I was on my way to kids sport thing. But anyway, we are holding the 38% retracement. So I guess what we should be saying right now is when you have a move like this and it's such a shallow retracement and it's a 38% retracement,
Yeah.
you got to be thinking if it can hold, that would give us, reason to believe that we are going to trade above this level at 4,300. So I'm just going to sit here and say, while we're above 4,100, I don't know if I really want to be bearish risk. And one of the other things, and Kman's noticed this as well because he just said it. One of the other things you've got to realize too is you've got like some of these emerging market currencies are starting to show some signs of life. Look at the Euro Mexican peso. This is a really big breakdown. Are you still short this thing, Kman?
Yes, sir.
Yeah, it looks great. I mean, I'm short dollar max, which obviously hasn't followed through yet. But this is another example of you take a drop, we stall around the 38% retracement. This is a resumption of trend type of move. So I mean, if it's going to play out a bear flag pattern, it will look something like this. The reason why I pointed out though is because, you know, when you have these emerging market currencies starting to firm up, that's usually a sign of risk on, right? So the rand is another one that is not making new highs. You can see it's kind of stalled out here. Those are just things you need to pay attention to. And then you got the Aussie dollar that is not, you know, making new lows. Matter of fact, it looks a lot better than the euro and the sterling. And that you know, suggests to me that the euro Aussie is probably going to break down pretty aggressively on a risk on move. I mean, if we see the S&P back at 4,300, this euro Aussie is probably heading to, you know, a new trend low, which wouldn't surprise me at all. So those are just kind of things that I'm paying very close attention to in this environment. You know, and then I was also looking at precious metals. I think precious metals are holding up some pretty key levels. Even crypto has the ability to rally from here. And I'm not a crypto bull by any stretch of the means, but you look at Bitcoin, and Bitcoin is, I mean, we have this flag pattern, but you know, I should probably zoom in a little bit, zoom in just a hair. Bitcoin, you know, this is a bit of a flag pattern, but at the same time, it's really a bigger channel that's not really going anywhere, right? So, you know, I wouldn't be surprised to see Bitcoin trade back above 24,000 on a risk on type of move. I'm not, like I said, I'm not bullish overall. I'm very, very bearish Bitcoin, but you know, doesn't mean that we can't get a little bit of a lift. So those are just kind of some things that I'm looking at. Ryan, what's big on your radar during the flow show? During the flow show, in Stelios, are you joining those guys in the flow show in the morning?
Most of the times, yes. I was there today.
You did today.
Do you need a report or something?
No. I wanted to see get you guys chiming in on what you guys talk about during the flow show, because I definitely am not there. I'm in the middle of my sleep. But Ryan, what's big on your radar that you guys talked about this morning?
There was a fair bit. One of the key things, if you trade in China, is that state media came out saying that moderate weakness in the yuan is good for exports, which can be tied as a green light for yuan to depreciate further. That means they're going to let dollar yuan continue to climb. It's always important to listen to what those guys say. They can halt a market or let it continue on. Kashkari was out overnight and pretty much echoing what I think the Fed's path is on, and that the Fed is going to do what they need to do to get inflation down. They're not going to stop until they do.
He's hawkish, right? I mean, you know, but I have to say, I think he's like him and Bullard usually just kind of are, I want to almost say, behind the curve as far as Fed governors go.
He was one of the most wrong the last year about inflation.
Yeah, him and Bullard are the two that I really pay least amount of attention to be honest. So, but anyway, so what did oh God, Neel Kashkari was in he was in The Mummy with Brendan Fraser. Yeah, I mean, he was. What was the name of that Egyptian god that he was?
Ramen Tootin or something.
Ramen noodles.
Yeah,
he played. I mean, you know, he was good in The Mummy. But what else did he say?
Well, the key point that I picked up what you said is, if we and markets are wrong and CPI is much more embedded at a much higher level than we appreciate, then the Fed will have to be more aggressive and probably for longer to bring it back down.
Yeah. By the way, there he is.
I bet you when Kashkari comes out and says, right, this is it, inflation is going to be high for a lot longer, that's when inflation comes down. I bet you.
Yep. Of course.
You guys see him, right? I mean,
yeah, I mean, that's, yeah.
Yeah, no, I mean, that was him. That's him. Anyway. All right. Sorry. But okay. So what did that do to currencies? Because you heard his, and by the way, he was not in The Mummy. He just looks like he was in The Mummy. what did that do for currencies overnight? Did that spur any movement when he said that? Because it was an Asian trade when he said it, and we did see the dollar actually firm up after his comments. I mean, we did see the dollar yen get back towards 137. The euro dollar continued to drop, and the euro still continues to trade pretty heavy. I mean, we gave back almost everything that we got following that data yesterday. So, but what else were you paying attention to on the flow show? Did we lose Ryan or did we lose me?
No, I'm here. I said,
okay.
how much do you want? I've got 2 pages of notes. Japan's firing up the nuclear plants. Biden's approval rating hit 41%, which naturally comes in line with petrol prices falling for 70 days on the spin.
Japan's. Do you just said Japan's firing up their nuclear plants again?
Yes, aggressively.
Does that obviously not? I mean, that's like makes more sense than anything. I mean, poor Japan.
Well, without knowing obviously with the issues with Fukushima and everything that happened after that, it is fairly big news. Probably a good time to highlight the news and research room on the chat room, Blake, because all the headlines went in there about that. If you want to play catch up.
And then this is a good thing, especially when it's Dale and I at like 4 o'clock in the morning. If you're in the chat room, here's all the headlines that Ryan is actually talking about, that he talks about on the Flow Show, and some of the headlines with China right here in their state media. So thanks for pointing that out. Matter of fact, if you guys ever want to jump into the ForexAnalytix chat room, you want to see how busy the chat rooms are, even on probably the slowest day that we have had yet this summer. It's still pretty active in the morning since I've been up. This is just since I've been awake this morning. So, Kman, what caught your eye on the Flow Show today?
Well, I think Ryan summed most of it up because he had 2 pages of notes this morning. That's 2 more than I had. So
okay. So what do you make of this emerging market currency strength that you're seeing?
I think, I mean, I've been saying it a couple of times. I think risk is redefined these days. We're trading different stuff, and it's tough to call risk on or risk off. It's just like each currency is moving on its own, in my opinion. So the MEX is benefiting more from its proximity to the US and wanting to build USA and buy USA. And that's going to benefit the MEX more than stuff like the Rand, for instance, which is further away. And then I'm still seeing euro weakness, as I was saying. I mean, once the dollar move was done yesterday, euro crosses started to come off again, and that is still showing euro weakness. So I'm short euro crosses, still long a little silver as well. Hoping to buy back what I've sold yesterday in the mid 18s or high around 1880, 1870 or so. But for the rest, I'm cautious in calling moves risk on or risk off. There's not one big risk off or risk on theme right now, in my opinion.
Yeah. Well, I think the market's just really waiting for Friday, right? I mean,
Absolutely.
Does everybody know here what time the Fed chairman is speaking? He's speaking at 10 a.m. Eastern. Just FYI. So thank you for the update there. Stelios, what are you suggesting everybody buy or sell between now and Friday?
I actually wrote on the chat room earlier. I have been what?
Sorry, that was a joke.
I'm not suggesting anything. I'm just saying what I think, what I'm doing. I wrote on the chat room earlier. I've been watching an ETF called URA, which is a uranium. Uranus, yes.
Yes. Okay.
And I've been watching this for a while. I really want to get along that. And today. It's up about 5% pre-market on the back of Japan. I'm gonna get long that today. I don't care how much higher it's going today. I'm only going half the size I want though, because this is very correlated with risk. And if we get anything hawkish out of Jackson Hole, this is gonna probably go lower. So I'm gonna get long today, half size, and then at the
It's
other
our
half.
pre-market. We're up at 21.15.
Yep, I know.
So
It's past the 50 DMA, and it's well past 50 DMA now, and I think this is a pretty impulsive move. But obviously, we have Friday to negotiate first, so that's what I'm going to be doing.
oh, only half size. So you're looking at my anus.
And it's not just Japan. It's basically everybody except the Germans, who are slowly turning towards nuclear energy. And I think this dependence of Europe on Russian gas and oil has really pointed out this problem. And I think governments are going to start to address that for the future. Obviously, you can't switch to nuclear from one day to the next. This is years of investment if you don't have already the reactors, and even if you do have them, to start them up, it takes a while. But this is not something I think they're doing for this winter or the next one. This is probably going to be like a long-term, very long-term plan, yeah. So that's what I'm looking at.
Well, it's built a really nice base. I'm gonna say technically, I think, as long as it stays above like 19, it seems like it's got a lot of room to move. And if it clears the 200-day moving average, it's going to be, it's probably going to scream back towards 30, I would think.
Yeah. And to answer a question, sorry, I don't trade this on a platform. I trade this via my private bank in Switzerland. So I give the order, they trade it. So it's not on any platform that I have.
Got it. Okay. Thank you. All right. Well, that's awesome. Hey, you know what? I want to mention one thing, which I found really interesting yesterday. And this has everything to do with you guys at home. We had how many traders qualified for the live larger accounts in the trader funding program yesterday? It was a large amount, larger than normal. Usually we might get one person, a day or something like that. How many did we have yesterday, Stel?
Yesterday we had 3.
Yeah, we had 3 traders actually that means they passed their assessment. And this is in the summertime too, which I found pretty awesome. We had 3 traders actually qualify for live trading accounts. And that's like a pretty good number for like I said, summertime. So if you guys haven't checked out the trader funding program, you want to learn how to make, using our funds and using larger dollar amounts, and you keep 75% of the profits, and we keep 25%, and you don't take any of the risk. I traded prop for many years, and the payouts were nowhere near that. So really, really, great opportunity, especially if you're in North America and you want to be able to trade some CFDs and cryptos in both different directions and a lot of different instruments. You have the opportunity to do that here at the Trader Funding Program. So make sure you guys check it out.
We're gonna get Kareem starting the program next week. He says in the comments. So good luck to him. If you need any help, we're here for you.
Awesome. And I actually have a friend of mine that's here that's local. He was waiting for September 1st, or beginning of September. He's like, I didn't want to start in August. I just want to start in September, and then that makes complete sense to me. But it's a pretty awesome program. Remember, there's no time limits, and that's the best part about the Trader Funding Program is we don't pressure you to complete your assessment within a period of time. You just go at your own pace, and you get to jump in our community in ForexAnalytix with that too. So for a limited period of time. that is just for a limited period of time. Anyway,
We have data in about 20 seconds.
yeah, I was going to say,
Durable
what do
goods.
we got as far as data goes? Let me go over to the
Durable
calendar.
goods orders and some Canadian data, which
The durable
nobody cares
goods orders
about.
could be definitely a market mover today. Let's go ahead and put this on it.
We're expecting a slowdown from last month.
Okay, here we go. Data should be coming out just in a moment.
Okay.
There we go. So it
Okay,
came a
so
little
it's-
worse than expected.
Did it? Hold on.
Zero.
No, the
sorry.
month-on-month number is 0.1 better than expected.
Yeah, it is 0.1 better than there's the orders that are a little weaker. So
Yeah.
not a big market mover. We're not seeing a lot of movement there.
Core orders up a bit better than expected. High revisions as well to last month. So not bad data, not hugely great, but nothing to see here really.
Yeah. Okay. Well, let's see if we can get some activity as we can go into North American trade. I do want to say that we did have a lot of false breaks yesterday, but you know the dollar. You know, in order for my opinion is in order for the equity markets to continue to stabilize at these levels, we are going to have to see a little bit weaker dollar. And just keep in mind the dollar index has rejected well, it's not quite a double top yet, but it is finding some pretty key resistance at those highs. So I do think dips down to 107.50 should find buyers, but there's some room. There's some downside space here. And, you know, following Friday, you know, if the Fed is actually more, you know, if the market reads Powell to be a little bit more dovish, you know, back below 107.50 would be kind of a bearish event for the dollar, and that'd be bullish for equities. So if you think that S&P can get above the 200-day moving average, that's going to have to happen, in my opinion. So, hey, thanks team for being here. I know it's a slow, like this today, and the volatility that we're seeing like this week is very similar and reminiscent to the volatility that we get between Christmas and New Year's, the Christmas holiday and New Year's. Very slow. It's the last couple weeks of August. Everybody's traveling. You know, a lot of Europeans are out. And thank you all for being here and providing your feedback every day. So, Dale, I know you have
I'm coming back from the Hamptons.
You are on your way back from the Hamptons. Well, make sure you do today's interview before you head out. All right.
Oh, I would never miss an interview with Anas El-Haji.
All right, guys.
All right. So thank you, team.
Thank you.
Thank you, Dream Team. Anas, welcome back. How are you, my friend?
Good morning. Should I turn on my video or that's good enough?
You can, if you want to show that handsome mug.
Oh, thank you. Thank you.
Yeah. I'll join
oh, I need to adjust the camera here just a second. All right. It's a bit in the morning here, so still kind of the lights are on.
Well, when
How
I
are you?
get up enough, I hear owls. Okay.
Oh,
so
wow.
that tells you what time in the morning I get up. It's 4. So, you know, a lot of things circulating around the energy patch, and you know, we broke that 94 support, have traded down to about $85. Looks like it's trying to come out of here. You know, really the biggest economic and energy story is the crisis in Europe and how they're going to be able to heat their homes this winter. Do you think there's going to be anything to help them get through it without making decisions on groceries or firewood?
I think they already started conserving energy and spending less and doing a lot of things. I am afraid that the decisions made by the European governments in the last few years were the wrong decisions, and they are paying a heavy price for it. One of the major issues, while everyone is focused on the impact of Russia and Ukraine, the bigger issue right now and the impact could be way higher than Russia and Ukraine when we talk about the impact of the drought. We have a global drought hitting the world and affecting the energy markets in a way that we have not seen in our lifetime.
You're talking about hydroelectricity with all the,
This is
major part of it. Yeah.
this is 1 of 10.
Okay.
1 of 10.
I'm
I'm not go-
concerned about
Yeah.
that.
I'm not going to go over the 10, but think about it this way. We need, of course, in terms of hydro, when
Right.
the water levels go down, they cannot generate hydro, and therefore they need to look for a substitute. Here is the problem for Europe. Europe increased its dependence on Norway significantly after the Ukraine crisis.
Okay.
And Norway depends heavily on hydro. And because of that, since hydro, and we have a drought in Norway, and hydro is lower, now they need to use their own gas at the expense of the Europeans.
Okay.
So from where the Europeans are going to get the gas? But this is not only the story of Europe. If you look at China, for example, we
Yeah,
have
they're
the
shutting
same
down
problem.
factories because of the
Absolutely.
drought.
So
Yeah.
here is the problem. You need water to generate hydroelectricity. You need water to generate electricity from coal, because we cannot use the coal without the water. We need the water throughout the process, and even at the end, basically, to prevent mercury from getting to the environment, or sulfur dioxide or others. We need water. If there is no water, then even we cannot produce electricity from coal. And as you know, they are switching back to coal.
Yeah.
We cannot, right now, the factories that are being closed in China, what are they? Well, there are fertilizer plants. We need that.
Yeah.
There are solar panel plants. So all of a sudden it's affecting the green energy. It's part of the wind turbine plants. So it's again affecting green energy. But this is not the only story. Since the Rhine River level is down, and other rivers around the world, including places like in the Western United States or in Brazil or others, but those ships and barges cannot go through. If you look at the Rhine, what are those barges carrying? They are carrying coal. They are carrying gasoline. They are carrying diesel. They are carrying all kinds of different types of oils and greases and other things that the factories need. So any way you look at it, this drought is affecting every single source of energy, every single part of the industry.
That's a very important point, and something that most people don't think about when they hear about water shortages. They worry about, I may not be able to keep my lawn. I'll have to take shorter showers. Of course, agriculture, you need water to grow the crops, but I really didn't put it together except for the hydro.
Well, here is more. I mean, this is what I told you, just part of the story. Look at what happened in Brazil last year. In Brazil, they had a drought, and Brazil, as you know, depends heavily on ethanol for transportation, the flex fuel.
Right.
And what happened is, because of the drought, they couldn't produce that much cane, the sugar cane, and therefore their ethanol production declined. That hit their transportation sector. What happened? They imported ethanol from the United States.
Okay.
So the drought,
I
basically,
mean, it's not even a question. So even if you had the supply of oil that everyone thinks is a problem, that that Putin is withholding, or perhaps I want to get to it. I want to ask you about Biden's fist pump in Saudi Arabia, and everyone thinks that if we just had more oil, everything would be okay, but it's so much deeper than that. If it's about,
well, here is one more, Dale. Here is one more, because this is really scary. Right now, some European countries.
I already need a tranquilizer. It's only like 5:40.
As you know, they are returning back to coal. We need water. They are returning back to nuclear. We need water.
Yeah.
But here is the catch. They are debating whether to go back and frack shale deposits.
They need
and
water.
They cannot do that without water.
Yeah.
Now, if here in Texas and other places, if the drought became really severe, I mean, here where I am in North Texas, we hadn't had rain in 2 months. We just had rain this week for the first time. And which
In
led,
Dallas, and that, so
Correct.
when we get rain though, Anas, we're getting these downpours that are like 1,000-year rain events, like in Kentucky and St. Louis, and we can't capture that water, can we?
correct. But the idea here is if we end up with severe drought, then this production that the Biden administration is counting on to come from shale is not going to happen, because we need a lot of water to produce oil and gas from shale. So when you talk about the drought and severe drought, it impacts every single energy source. It impacts every segment of the industry. And we end up with a situation where the impact of the drought is more severe than the impact of the Russian invasion of Ukraine. And here is another catch. Decision makers can change their decision regarding Ukraine and the politics of Russia. They can control that. European leaders can switch and say, what the heck with Ukraine? We don't care about Ukrainians. We are going to deal with Putin. We don't want our people to die.
That's his goal.
But they cannot do that with drought. They cannot do anything, period. They have
the Fed too. I mean, when you think about the Fed trying to control inflation and you bring up water, I mean, I used to say, well, they can't print corn. So, I mean, how are they going to bring down food prices? And now you bring up water. That's only in God's hands. How do we muddle through this? Are we really maybe on the edge of, society and economic commerce really breaking down completely because of a drought? That a drought could kill world economies.
Absolutely. And one of the problems with the drought is the government has no choice but to provide subsidies. But for how long? If the drought lasts for 5, 6, 7 years, the government even cannot afford to spend more money. I mean, that's why people will die. That's why animals will die. We will lose farmland. It's a really serious problem. And the issue here, and I hate to make any discussions about climate change. And the issue basically is not whether I am for it or against it, etc. But here is the thing: all the flooding you mentioned in Louisville, in Kentucky, or in Dallas or others, if you read what the experts said about flooding, it has nothing to do with human activities. It's the media that is making up this story. But the actual reports from the IPCC or others, all of them basically showed that flooding has nothing to do with the human activity, which means that we really have no solution, no immediate solution. But there were other stories, especially last week, about the oil market. Probably you've seen that the prediction about the OPEC Plus defending $90. That prediction was made in June. And we heard from the Saudi oil minister just a couple of days ago. Basically, they are defending a level around that. That's 90 Brent, by the way. And he had an interview with Bloomberg, but it was a written interview, which means that they submitted the questions, and then probably several experts worked on it.
What a boring thing to do.
It is, but sometimes especially depend on what the source is, because
we're not going to move world market. You'll move world markets with a word, but
correct. But the problem is they got burned so many times by the media kind of changing what they are talking about or changing the perception. Correct. But the Saudi statement basically is very important in various ways and contradictory at the same time. Because they are saying, look, their view basically is this media talk about recession that reduced oil prices is political. And based on their view, the market is tight. The physical market is tight. And therefore, the media is kind of like directed to emphasize the bearish sentiment. And therefore, those participating in the market just left. As you know, the longs position just declined substantially. The problem is, if you look at OPEC report itself, OPEC report was bearish because they were expecting a surplus in 2022 and a surplus in 2023. So they cannot have it both ways by saying, look, the physical market is tight. There is no justification for the decline, while their report basically is bearish. And that's why we need to pay attention to the next OPEC report to see whether they are going to change the tone or not.
When is that?
It is going to come around the 11th, I think the 11th or 12th of next month.
Okay.
But the issue here is that they always complained about the role of speculators. As prices went up, they say it's not our fault, that's speculation. Now it's going down, they are saying it's speculations, but they said, oh, we want them back because we want more liquidity in the market and we want them to come back to the market. Well, you cannot have it both ways.
Yeah, his volumes thinned out in many markets. Volumes have really kind of dried up in the bond market, etc. The Fed's trying to save the bond market. But what's liquidity like on the cash side of the energy market?
I think that's where the Saudis are trying to emphasize the point that you guys forget about the paper market, focus on the cash market, and the cash market is really tight. But my main point here, and especially to the media, now I would like to warn here that sometimes officials say statements, they don't mean that much, and it's a very well targeted statement, and we analysts come in and make a big thing out of it. And probably what I am saying next fits into this, but I don't know. But it is my job basically to bring this up. The timing of this statement and the interview is very important because it came in before the president of China visits Saudi Arabia.
Okay.
And the Chinese economy,
that's before his election.
Correct. And I mean, this is like in the next probably couple of weeks or so. And you cannot separate those statements from the visit. And the reason why, because the Chinese economy is really in bad shape. Yeah. They are cutting their budgets significantly, whether on federal level or the regional levels. And they really want oil prices to be in the 60s. Okay. So what we've seen, basically, the Saudis are telling the Biden administration, look, when you come to Saudi Arabia, don't talk about oil. Oil is a side issue. It's a done deal. We are not going to increase production. Don't expect lower prices. Now they are sending the same message to the Chinese. Say, look, you want to talk about investment, you want to talk about other things, etc. Please do not talk about oil prices. And therefore, they did it before the visit. So I think it is a targeted message to the Chinese that forget about talking about it, forget about the 60s and 70s that you are asking for. And the Chinese reaction is very clear. They already built massive strategic petroleum reserves, and they are going to use it. And the Saudis basically are telling them, you know what? Just use your reserves because it is in the interest of Saudis to lower those reserves and keep them low. The Saudis' objective was to keep reserves low and to keep inventories low. But since the Russians are selling at a discount and China resorted to the lockdown, as you know, in recent months, so they were able to build that inventories regardless. If it wasn't for the lockdown,
they can't reopen. They can't reopen with their COVID policy.
So without the lockdown, inventories would have been low and the storage would have been low and the Saudis' wish would have been met. But they couldn't, of course, control that. The other issue related to this is it really a message to the Biden administration on one side and to other OPEC members and to the Russians at the same time that, look, OPEC plus deal is going to end at the end of the year, but this is not the end of it. We are going to have a new deal and we are going to be ready for a recession. We are going to be ready for a decline in demand. If something happened, we need to cut again. So in a sense, this was a preemptive strike and a message to the rest of OPEC members and the Russians, etc. And it seems that the Russians are willing to cut in case of a recession because that's the message they sent to
cut prices. Their production's down quite a bit, isn't it? Because of
not much as some people expected. Their production of petroleum products from refineries declined. It's been picking up recently, But the whole idea here is, as expected from, I mean, if you look at the sanctions literature in the last 100 years, it supports everything you see today. And those who were saying that we are going to see a major decline in Russian production, they did not really study the literature of sanctions. If you look at it, it is very clear that there is no way you can control or reduce Russian production or exports unless you use the Navy and blockade all the ports. That's the lesson from history. Otherwise, Iran survived the sanctions. Cuba, despite it's a very poor country, it survived the sanctions for 50 years. So to say that all of a sudden we are going to impose sanctions and Russian production will decline, we are not talking about anyone here. We are talking about a fox. Of course, we are talking about Putin. So to think that just making statements is going to make Putin just yield to it is a complete nonsense.
Yeah, it's really interesting that the two greatest economic powers on the globe are going hand in hand to Saudi Arabia. And Saudi Arabia has leverage. You know, it almost looks like Russia and Saudi Arabia hold all the cards for what's going on in the world.
It looks like it. And this is, I'm glad you mentioned this, because in these statements that we mentioned to the media a couple of days ago, it is a message to the Biden administration and Iran at the same time. And they are telling Biden, look, if you are going to bring Iran to the fold, if you are going to have that nuclear deal with Iran, and you think that this is going to help you by increasing production and lowering oil prices, guess what? We are not happy with the deal. We are not happy with what we are doing with Iran. We are not happy that Iran is supporting the Houthis who attack us every day. So what we are going to do is we will cut production if Iranian production increases. So we are going to leave room for them, but don't expect that to be an extra.
You know, they talk a lot about, you know, Israel. A lot of people in Israel say that they're not going to allow Iran to go nuclear. And I believe that Saudi Arabia probably feels the same way.
Absolutely.
So, I mean, isn't there a chance that these two countries are allies to take out their facilities before they get there?
There are 2 points here. The first point is, I think as being posted in the media and everyone knows that there is some sort of communication between the two. And but one of the reasons why why Biden went to Saudi Arabia basically is hoping to create some setup or some environment for more cooperation between the Gulf states and Israel. As you know, there are two countries that normalize relations with Israel, that Bahrain and the UAE. But the issue here is, if you really look at the Israeli view, and I'm just talking about common sense here, okay? From an Israeli point of view, every time the Israelis get mad and they tell the United States, I'm going to bomb Iran, the US administration give them like $700-800 million. Okay. Look, I would love to continue this for 100 years. I want the Iranians to do what they are doing today forever. This is a very good way.
Yeah.
So, and this has been going on for a long time. But this brings us to the point about the Iran deal, because I think audience should understand this, that if we end up with a deal anytime in the next couple of weeks,
a crappy deal, a worse deal than before we pulled out.
I mean, whatever it is, in terms of the oil market, it has no immediate impact on the physical market, because they are selling.
So we're not going to get a quick $5 break the day they sign the crappy deal.
Correct. But I would like to clarify one point about the floating storage, because some people are saying, look, they have a massive amount of floating storage and they can dump that on the market and that affect oil prices, etc. No matter what, any way you look at it, just the deal announcement is going to lower prices, no matter what. It's going to be for a few days until people realize what's going on. But the story of the floating storage basically has been missing from the market. People think they have floating storage because of the sanctions. No, they have floating storage because it's mostly condensates, and most of that is coming from gas wells. And they depend heavily on gas in the winter. And most of their fields are what we call wet gas, which means that to produce natural gas, they need to produce the liquids, a massive amount of liquids. They export gas to Iraq. They produce a lot of liquids. So what they are going to do with that liquid? They can either dump it or store it. So they have to store it. So the existence of condensate storage in 50, 60, 70 million barrels is not related to the sanctions per se. It's related to the massive production of natural gas, which means that if we sign a deal tomorrow, it's not necessarily that they will market all of that.
Okay.
The second point, I think we still have, what, 4 minutes or something like this?
Okay.
Yeah. Second point, which is important, is this. Historically, we've seen the Iranian government, once they know that a deal is imminent, they cut their exports and they start storing the real oil, in a sense, which an API below 40 degrees. That's the real oil. And they store probably 30 to 40 million barrels a day. This has very important political and economic implications, because the idea here is once the deal is signed, they can flood the market with that. They are sending a message to OPEC members, yes, I can increase production and exports. They are sending a message to Europe and the United States, yes, I can do that, and therefore I have the ability. They are sending a message to their population, look at the benefits of the deal, because there are a lot of people who are opposing the deal. Look, the benefits is we are exporting massive quantity and we are earning a lot of money. So there are benefits to that. That's going to be sold publicly in the international market at the world price. So yes, a deal is going to lower prices, but what the price that Iran will get out of it is higher, and probably way higher than the discounted price in the black market.
Okay.
And that's the economic benefit of that.
All right. So give me your range for the fall and winter of WTI. Usually have a range in mind. It's tougher now, isn't it?
Well, of course, as you know, I mean, talking about these things is very tough, whether we have a recession, we don't have a recession.
Oil's very fluid. Energy's fluid.
Correct. But I mean, at least we have some principles to depend on. Okay. And the main principles basically is Russian oil is going to be in the market. The big decline is not going to happen, as some people are saying. If Iran comes back, we will see an impact within several months. We're not going to see an immediate impact. In terms of China, China will use their SPR as long as prices are high, period.
Okay.
And the problem is, and this is probably, if anyone is listening today to this, the main message of today's meeting or interview is this. If you look at the world oil market, it is literally China versus OPEC plus. It's not Biden versus OPEC. It's not Europe versus OPEC. It's China versus OPEC plus. And as I mentioned on Twitter, the SPR, the Strategic Petroleum Reserves, are going to put a ceiling on oil prices.
Okay.
OPEC plus is going to put a floor. So oil prices are going to fluctuate between the OPEC floor and the SPR ceiling. Now, some people are saying, well, Biden already used the SPR and therefore no more by the end of the year. Well, when we talk about the SPR, it's not really about Biden. We've been talking about the SPR since 2018.
Jimmy Carter.
And we were talking about China since 2018. It's the Chinese SPR that prevented oil prices from reaching 100 in 2018. It was the Chinese SPR that prevented oil prices from reaching 100 in 2021. So it is really the SPR of the Chinese. What Biden did was exceptional by any means in terms of the massive amount that he released and planning to release. But the issue is still valid, that the bottom is set, or the floor is set by OPEC, the ceiling is set by the SPR, and the Chinese will do every possible way to keep prices down. It's the Chinese economy right now that's going to really determine the fate of the oil market. It's not Europe, it's not the United States. And when we talk about the drought, I think the Ukraine is going to be a side issue in front of that drought issue.
Okay, I have one question from one of our attendees. Please ask Mr. Anas about Bahrain has 80 billion barrels of shale oil, said want to produce them many times. Once claimed is in competition for his oil. Is there any hope or just some official claims?
Sorry, what is the deal here? I mean, I did not.
I think he's talking about will Bahrain develop and produce the 80 billion barrel of shale oil they say they have.
Well, we don't know much about it. I think I know the person whom you are asking because he did ask this question yesterday.
Mahdi.
Yes,
is his name,
yes.
yes.
They are
He
working on
follows
it.
you around everywhere, huh?
They mentioned this. They are working on it.
Yeah.
There is unconventional in those countries. Saudi Arabia already developed them and working on more development, but not more than that. So we'll see what's going on. Do we still have a minute or two, or we are done?
Yeah, we're
Because
okay.
I have one slide to show quickly.
Go ahead. Okay, share your screen. It's at the bottom.
Okay.
Green button.
This is you see that screen says conclusions.
Yes.
Okay. This was a conclusion of a presentation I gave just last week in Colorado, and I would like to go through it quickly. Basically, that when we talk about medium term and long term, we are heading for unprecedented energy crisis, and these are the reasons why. So each one of those is a presentation, by the way. So the outlooks are underestimating oil demand, ESG and carbon neutrality accounting. This is going to be the matter of all Enrons, as we mentioned last time on your show. Renewable energy. People must understand that even if Europe doubles and triples and quadruple solar and wind, it has no impact on oil, because oil is rarely used in power generation. Hydrogen will maintain demand for oil and gas. Vehicle fuel economy is way overestimated. Electric and hybrid vehicles, their impact is overestimated. I'm not talking about their numbers. I think we are going to have hundreds of millions of them, but their impact is overestimated. Petrochemicals, the demand for petrochemicals is going to increase the demand for oil and gas, and we need petrochemicals for everything green you can imagine.
Everything.
Okay, so we need that, and the demand is going to go up. And in terms of crude quality, if my theory is correct, we have failure of green policies, and the demand for oil and gas is going to go up. Then the shale will benefit because of the gasoline. The gasoline demand is going to be way higher than expected, and shale companies are going to benefit from that.
Okay, and now so hearing your analysis for 30 minutes in a very murky environment and a very conflicting, confusing environment is like a tall glass of water. Thank you so much for refreshing our minds with what we have to face ahead, and appreciate all the visits and how much we learn from you every time you're here, my trading warrior.
Thank you, Dale. Thank you very much. Have a great day.
Inshallah, Anas.
Inshallah. Bye.
Okay, so that's a wrap, everyone. One of the best out there. I would watch this video again and pay attention to what Anas says. And, you know, I guess we can't give up hope. All right. Take it easy, everyone. You could join the team in 13 minutes on the morning edge. Good hunting the rest of the day. We'll see you tomorrow. And really, remember, don't just count your pips, count your blessings. There's more to life than just pips, guys. Adios.